Markets continuing to make new highs, but are they running too hot? Let's talk markets and your money right now. Michael Tyler, Chief Investment Officer at Eastern Bank Wealth Management. Here on set is Debbie Cunningham, Chief Investment Officer of Global Liquidity Markets at Federated. We respond a lot of times to news here, I think, but a lot of these, you know, the business media, they assign stuff to people every day, right? And writers say, okay, here's the one that I saw this morning, my hype du jour from some silly, why Wall Street thinks the stock market is on the verge of a melt-up. So where did they get that? And is that what Wall Street thinks? And what are the chances for that, Deborah?
Why Wall Street thinks the stock market is on the verge of a melt-up.
I mean, it's been melting up for...
Not a meltdown, a melt-up.
Been melting up for a couple of months.
I thought he was going to say meltdown.
Yeah, I thought so too. So this is positive, not negative.
That's what they're saying. And we've had 2 months of how many of the 16 record highs?
Leading up. I mean, that's
right. And I think there's lots of positive factors. I mean, we have, you know, global issues. Brexit, it's not completed, but it's in a pretty good phase at this point with the elections behind us. You've got China trade negotiations that at least the phase one aspect of it's completed, and expectations for at least slow but steady movement in 2020 is pretty high. You've got interest rates that are low. You've got a consumer.
So you're positive.
Absolutely.
About next year, too. Slow but steady, though.
Slow but steady.
The reason I say that in the last... time goes very quickly, but 3 months ago, there were times when we were down under 2,900 thinking that the guys at Morgan Stanley or some of these other bears were going to be right about the 2,700s and the 2,500 targets that they had. Sure. You see where we are today. We're almost 3,200 on the S&P, almost 3,200. So I don't know whether these guys throw in the towel at this point, but we certainly have had 2 months.
So that headline makes you nervous because...
No, it doesn't really make me nervous. It just, you know, all the stuff about trade, about Brexit, about impeachment that we've been worrying about, the market, either it's the Fed, and I've seen people say that you can draw a line for QE4, what the Fed has done, Michael, and they call the buying and T-bill buying and everything, and even the repo market. Everything the Fed has supported, Michael, is that why? Does that correlate with that move on the right-hand side of the chart, Michael? Is it the Fed?
Oh, that's one part of it, absolutely. But, you know, Debbie's right. Everything has gone well so far this year and everywhere you look. And to me, that's the biggest thing that I worry about. We're not on the verge of a melt-up. We're in the middle of one. You know, it's up 8% or something just since the end of September. And these things are going very well. That's true. But I worry that how much more good news is there that we're waiting for? Yeah, maybe we'll get phase 2 of a China deal. Maybe not. That's kind of at risk. We're looking for 8 to 10% earnings growth next year. Maybe that's too much. So there are still a few things to worry about, but the list is getting shorter. And as these accomplishments, as these good things are happening, the spending deal that was just announced, for example, averting a government shutdown right through next year's election, these are all good things, but too much of a good thing might lead investors to be a little too happy.
I don't know how long the market looks ahead. Maybe the election is not quite on the radar yet because, I mean, we got to have an impeachment vote this week. It's only the third time in history.
You looked at the betting line.
I know.
The betting line says Trump wins, so what's the...
The betting line's at about 47 cents. But...
So what's...
Well, because there's always a...
Tail risk, as you might describe it.
Yes. A Bernie... tail risk. Bernie is almost tied with Biden. What would happen in a Bernie or Elizabeth Warren and what Frank Luntz was on yesterday said it's not the chances aren't zero Bernie Sanders could be president.
They are not zero. They're probably not over 50%, but they're definitely not zero.
Are they over 20? I mean, don't tell me 50. 15.
No. The likelihood, though, of that happening is less than 50%, even in a best case scenario.
Well, what would that do? Would that get you more defensive? Definitely
more defensive. You've got less of upside, less upside at that point in time.
What do you count? You're less upside, Michael. Is that how you would characterize a Bernie presidency? You get less upside, huh?
Well, no,
I think for the hills. I would put everything in my mattress.
I'd like to know who's going to win Congress and the Senate, too. You know, there are checks and balances. But having said that, I don't think there's upside at all if Bernie wins the presidency. No. I think the markets will go down. But, you know, the way to look at that is next year we've got a much higher probability of small gains, especially in the stock market, But there is a much smaller probability of a negative year. And if it's because of President Sanders or Warren, or because of a recession, or because of any number of other things that could happen, the downside magnitude is bigger than the upside magnitude. It's just much less likely.
Is that a reason
But
to get out
I
of the
think
market?
even in the case of a Democratic presidency, you end up with something that is a recession risk, but not in 2020. There's nothing that indicates at this point that quick of a turnaround is going to happen.
But
You've
would
got
it be
a
something
slowdown.
that the market would sniff
Markets
out?
look
Because
ahead.
markets are forward looking.
Exactly.